Support and resistance, two of the simplest words in the language of the markets, yet they contain the deepest truths of speculation. Most traders overlook them because they seem too obvious. But I learned through blood and ruin that the simplest concepts, when mastered, form the foundation of all great fortunes. When I began in bucket shops, I didn't know anything about fundamental reports or economic cycles. All I had was a tape, the ticker. I learned to watch how prices moved, how they paused, reversed, or broke through certain levels. Those levels became my compass. I didn't know it then, but I was learning the art of identifying pivotal points where markets decide whether to climb or collapse. Support and resistance are nothing more than reflections of human psychology. Every tick of the tape records the hopes, fears, and greed of thousands of minds acting together. When price halts and turns upward several times from a certain level, it tells you that buying interest support lives there. When it rises and cannot push higher past a certain price, resistance stands guard. But remember, these levels aren't drawn by your charting tool. They are carved into the emotions of traders. In every bull market, there are points of resistance that must be overcome before prices can move higher. And in every bear market, there are points of support that must be broken before a full decline can unfold. The trick is to know when a level holds and when it gives way. That difference decides whether you walk away with profits or with scars. I used to think I could predict which way the market would turn. I was wrong. The market doesn't care what you or I think. My job wasn't to predict it, was to react. When price reached a known resistance and failed to push through, that was a warning. When it broke through cleanly and held above it, that was confirmation. The pivotal point had been crossed. In those moments the market was speaking. My fortune depended on whether I listened. Let me tell you something that took me years to learn. A breakout through resistance isn't enough. The real proof comes in the retest. When the market breaks a level and then comes back to test it from the other side, that's when you see the truth. If that level now acts as support, it's no longer resistance. The market has changed its character. I built entire campaigns around that behavior. It's not a trick or pattern, it's the psychology of crowds materialized in price. In my biggest winning trades, I didn't chase price. I waited for these pivotal points to confirm themselves. When a stock broke resistance on strong volume, pulled back to test it, and held steady, that was my signal. I entered when the crowd hesitated. The amateurs waited for reassurance. I acted when the market had already spoken. I remember one campaign vividly. It was during a powerful bull run, and a leading stock had been halted several times at a certain price. It became a ceiling no one could break. Day after day, it hit that level and pulled back. Traders grew tired and sold their positions. But I waited. I knew that when resistance is tested repeatedly, it weakens. Eventually, that ceiling becomes thin glass. One strong push, and it shatters. When it finally broke through, the tape told me everything. Volume surged. I entered with conviction, not because I believed in the stock, but because I believed in the tape. A few days later, the price pulled back right to that old resistance level. Everyone thought it would collapse again, but I knew the game. I watched it test that level, hold firm, and turn higher. That was my confirmation. I added more to my position. What followed was a beautiful advance. Not luck, not intuition, discipline. Support and resistance are not about lines on a chart. They are about behavior, about what traders do when price reaches familiar territory. Most fail because they trade from emotion. They buy at resistance out of greed and sell at support out of fear. They reverse the logic of success. When a market is strong, resistance levels are meant to be broken. When it's weak, support levels are meant to fail. That's how you read the character of the market. Watch how price behaves when it reaches these pivotal points. Does it break through and hold, or does it retreat and hesitate? The answer tells you which side is in control. A trader must learn to think in probabilities, not certainties. The market never promises anything. All it offers are clues, hints that point to strength or weakness. Support and resistance levels are the clearest clues of all, but you must learn to confirm them through behavior, not wishful thinking. Here's another lesson that cost me dearly. A support level that fails often becomes future resistance, and a resistance level that breaks often becomes future support. The market has memory. The same traders who bought and lost at a certain level remember it. When price returns, they react either to cut losses or capture gains. That reaction builds the new barrier. Every major trend reversal begins with a failure at a key level. When a bull market ends, you'll see support failing one after another. When a bear market dies, resistance gives way step by step. That's the pulse of the market. The sooner you learn to read it, the longer you'll survive. In my early days, I ignored these signals because I was hungry for action. I would buy simply because prices seemed low, or sell because they looked high. That's not trading, it's guessing. And guessing is the quickest route to poverty in this business. I learned that money is made by sitting, not by trading. Once you identify the pivotal point and the trend direction, the hardest part is waiting. Patience is the true test of discipline. Traders who can't wait often buy too early and sell too soon. They confuse motion with progress. There's a saying that the market is never wrong, opinions often are. Support and resistance reflect the collective opinion of all participants. Your opinion means nothing compared to that of the market. You can either align with it or fight it. And if you fight it, you'll lose. The irony is that most traders see these levels but fail to respect them. They see price break through resistance and immediately short it, thinking it can't go higher. Or they see price fall through support and try to buy the dip. That's how fortunes vanish. When a level breaks with conviction, follow the direction of the break, not your ego. In bear markets, I watched how old support levels turned into resistance zones. Traders trapped at higher prices would jump at any opportunity to sell and break even. That selling pressure formed the ceiling that capped every rally. Once I understood this, I stopped buying in bear markets altogether. Instead, I sold short when price rallied up into those old supports. It was like selling against invisible walls built by trapped traders. The opposite holds true in bull markets. When price corrects and pulls back to old resistance levels that now hold as support, that's where new upswings begin. The crowd gets fearful at those points, thinking the bull is over. But the smart trader knows the game. Those are moments to accumulate. There's nothing new in Wall Street. What has happened before will happen again, because human nature never changes. Fear and greed are constants. Support and resistance are simply the footprints of those emotions on the chart. When you learn to interpret them, you gain a powerful advantage. But no matter how skilled you become, remember this: never trust any level blindly. Always use risk control. I never placed a trade without knowing where I was wrong. My stop loss wasn't emotional, it was mechanical. If price moved against my position beyond the pivotal point, I was out. No arguments, no hoping, no waiting for a miracle. The first loss is often the smallest loss. Protect your capital, and the market will always give you another opportunity. Another key insight: strong support and resistance don't appear on every minor fluctuation. They form through time and repetition. The more times a level is tested and holds, the more significant it becomes. But once it breaks, the reaction is violent. That's why I loved pivotal points. They offered both safety and opportunity. When price broke a key level, it often moved swiftly in the new direction. I used to map out these levels before the market opened. I wanted to know where the fight would occur, where buyers and sellers would clash. That preparation made all the difference. When the action began, I didn't have to think, I just reacted. Trading without preparation is gambling, and gambling belongs in casinos, not in markets. The beauty of this business is that you can always start again. I made and lost several fortunes. Each time, the cause of my downfall wasn't the market, it was my failure to obey my own rules. The market punishes arrogance and rewards discipline. I found peace when I stopped trying to outsmart it and instead followed its signals: support, resistance, volume, and trend. To the modern trader, I say this: the tools may have changed, but the essence remains the same. You can have 100 indicators, but if you don't understand how price behaves around pivotal levels, you're flying blind. Strip away the noise and focus on what really matters: price behavior and human reaction. If you see price breaking above resistance with strength, don't argue. If you see price collapsing below support, don't rationalize. The market is giving you the verdict. Your job is to listen and act accordingly. Many traders ask how to know when to enter. My answer, when the market confirms your level, not before. Let the crowd test it. Let them show their hand. When they hesitate and the level holds or breaks with conviction, that's your moment. Not when you think, but when the market proves. Discipline is what separates the professional from the amateur. The amateur trades to feel alive. The professional trades to survive. He knows that not every day offers opportunity. He waits for those pivotal points where risk is small and potential is large. That's the secret to longevity in this game. When I look back at all my triumphs and disasters, one truth stands out. Success in trading doesn't come from predicting the market, but from understanding it. Support and resistance are the grammar of that understanding. Learn their language, and the market starts making sense. When you see price hesitating at a key level, imagine the emotions at play. Buyers hoping it will rise, sellers praying it will fall. The outcome is determined by which side has stronger conviction. The break of that level is the verdict of the crowd. Follow the verdict, not your heart. In this business, pride kills faster than losses. Never marry a position. If support breaks, get out. If resistance holds, step aside. Your loyalty belongs to the trend, not the trade. The market will always be right in the end. The beauty of these pivotal points is that they allow you to trade with clarity. You know exactly where you're wrong. That gives you courage to act boldly when the odds are in your favor. Without a clear level, you're just gambling on noise. I've seen traders freeze when price approaches a key level. They hope it will reverse in their favor. Hope has no place in trading. The market rewards decisiveness, not emotion. If you must err, err on the side of discipline. Remember this, in every great move there comes a moment when resistance turns to support or support turns to resistance. That's the moment to strike. Those are the pivotal points to profit, whether in bull or bear markets. You'll never eliminate losses, but you can make them small. You'll never win every trade, but you can ensure your winners are larger, and the best way to do that is to anchor your trades around these key levels. I built fortunes not by being right often, but by being right at the right time, at the pivotal points when the market revealed its hand. Learn to recognize those moments, respect them, and trade with discipline. Because in the end, markets rise and fall, traders come and go, but the laws of price behavior remain eternal. Support and resistance are not just lines, they are the pulse of human nature. Listen to them, and they'll tell you everything you need to know.